Okay, with my last Elliott wave analysis, it was pretty obvious that I was early in my predictions. So what I want to do this time is I want to go over updated Elliott wave analysis and be a little more orthodox about things. First, I got in touch with Elliott Wave International, and I asked them about the climax rule, and they said to try to include as much of the data as you can. So instead of filtering out multiple days that I believe were climaxes, I'm going to do straight from low to high, and I'm only going to use closing prices. So we still the basic same Elliott wave patterns where I believed this was a leading diagonal from here to there. Actually, right there. I believe that was a leading diagonal. I believe this area was a zigzag correction downward. This wave 3 was an impulse. And then this wave 4 was a triangle correction. And then this wave 5, starting here, is an ending diagonal. So get rid of these. I'm going to focus mostly on this last wedge that we have. First, just noting I put this trend line here, probably going to prove to be some kind of support or resistance. Okay, so last time, well, let's first start off with projecting equality. Between waves, they tend to be equal in proportion. So for the first wave, I go down to wave B. I'm going to move that to the top here. I'm going to add the 161 retracement. Exactly right there. Now, I said they tend toward equality, so am I missing something? No, because it's nearly the exact same distance as wave 3. So I'm going to leave that one there. I'm going to duplicate it. I'm going to leave this one right here. So what we want to notice, there is a confluence point as well as a support point at 12,190 on the Dow Jones Industrial Average. This is assuming that this area right here is a top, and as I look at the futures right now, we're already down about 0.6% on the S&P 500, so I'm going to say this is a top. So I'm working backwards here, by the way. I'll go into the inner studies in just a second. So I am projecting that this is a leading diagonal, and I'm going to project that's going to retrace into the area of wave 4. So that gives me, let's get rid of these a second, keep that number in mind, 12,190. So 12,190. I'm just going to leave that there. The target zone would be in the area of wave 4, which is from here all the way down to here. That's the next step. Now I'm going to get a better representation, I want you to keep that 1290 level in mind. So 12,190, about right there, or 12,178. It won't snap to it. But that, we have those two confluence points with those Fibonacci retracements. But there's one other thing that's going to act as a support level, and that is going to be, let's put the moving averages on here. We have, I'm going to do two. I'm going to do the 50-day, which is widely followed, and the 200-day, which is extremely widely followed. Where are these right now? The 50-day is about 12,150. It could rise to about 12,190 by the time this actually declines. Oh, sweet, quotes are back up. This moving average, the 200-day, it's going to rise a little slower, but it gives us a more precise target range between that 12,190 and the 200-day moving average. So my target right now is I'm going to stick with the 12,190 because economic conditions are better. So I did that. Now I'm going to jump into the 60-day chart by 2 hour. I want to show you this final wave movement here. Ending diagonals also should be divided into somewhat equal parts. So this is just to show how I was wrong last time. This was the wave 1 of the ending diagonal. Where is it? The ending diagonal will have 3 separate waves. So I called this wave 1. I called this wave 2. I called this wave 3. And I said that this wave went all the way up to, let's see, 1 up, 2 up, 3 up. I said this wave went all the way up to right here. And then I said wave 5 started right here. So move that. There we go. We'll go to the actual top. So I said wave 5 started right here. So if we actually do those proportional measurements, I'm going to start just from the center. Wave 5 to the top. There's that. From the bottom, let's see. The only real proportion that we have at this point is just between the wave 3 and the wave 5. The wave 2 really isn't showing me anything at this point. Let's see if doing it again gives me anything if I do it in reverse. So we have a little bit of proportionality going on, not as much as I would like to. Like you see that this goes all the way up to the 1.68, but this one where it tops out, just strange. So that's the only gap that I'm finding in my analysis. Aside from that, it looks pretty strong. Traditional analysis, if I get rid of everything and I just go to a simple daily chart, it's pretty obvious that we're starting to have trouble. As you see, the momentum topped right here and was declining ever since. In addition, take the triangle, or just take trend lines, they're breaking through. RSI even had a divergence right here and even broke its own trend line. See if the program will let me draw it. Well, let's see, it's about to break its own trend line, especially with the futures like that. But we're definitely due for a correction, so I'd say buy around 12,220, 12,000 and 12,190. That's my target for now. So happy trading, and take a look at that MBIX. Looks like a good trade.